Good evening, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hopefully all you guys had an amazing weekend. And in today's markets, guys, well, the bulls putting in their second day of rally in a row, building upon Friday's gains. And I'm pretty sure you guys have seen the news as to why the markets were green today. Of course, it was a clarification and more relaxation of the tariff requirements, this time on smartphones and computers, which are now somewhat exempt from Trump's latest tariffs. There were some clarifications on that, though. Now, the only exemption is that they will not be subject to the 145% full effective tariff rate on Chinese goods. They will only be effective to the 20% tariff rate on the baseline fentanyl trade, as was stated a few months ago. And that is very important for companies like Apple that source roughly 90% of their phone productions and assemblies in the Chinese markets overall. That did wonders for big tech names today all across the board. So, are we possibly through on such a boring day where the SPY is only up 1%? The Qs are only up 0.7. Stark contrast from last week where we were swinging like 4, 5, 6, 7, 10% per day sometimes. Stark contrast today, right? Bit of a boring, bit of a chill day. Are we possibly through maximum fear, maximum volatility? Is this possibly a local bottom that's been established with all those big fear catalysts? Well, maybe. We'll take a look at that later on in today's video. Now, speaking of today's video, number one, what we're going to be doing is a rundown of the bank earnings. We know that we've been having a ton of bank earnings on the Friday session. I wasn't with you guys. I missed you guys too. Now, we'll be doing a recap of those bank earnings on Friday and also some recaps from some earnings today on the banks, with more coming tomorrow. This morning was Goldman Sachs, of course. We'll be focusing on two key things. Number one, expectations for deals. Are large, wealthy, either individual clients or corporations, are they in the market for deals right now, or is the environment a bit too uncertain for them? Because that is a big component of guidance for corporate America. And number two, because we're talking about banks, yes, their earnings were good, but what we want to focus on is, are they still well capitalized? Do they have enough liquidity to get through a possible market crash and or a recession? Or are we possibly displaying some of the same symptoms as 2008? That is what we need to focus on. Are the banks well capitalized? Can they survive a credit crisis? Can they survive a liquidity crisis? Those are going to be the main points of focus for today's bank earnings. And we're going to do a batch analysis. I'll run through a bunch of them: JP Morgan, Wells Fargo, and Goldman Sachs from today. That'll be part one of the video. Part number two, we're going to go through our usual technical analysis of all the major stock market indexes, followed by our big tech names, identify some levels, see where the best possible points of entry for any swing trades or long-term portfolios can be. And lastly, to cap it all off, we will take a quick review of my portfolio for the trades made today and which ones I am keeping into the end of this short trading week, which ends on the Thursday session in observance of Good Friday, of course, which will be a market holiday. So it should be a very fun video, guys. Let's jump right into the action, shall we? So the SPY up about 1%, the Qs up 0.7%. Overall, guys, fairly decent day. Broad market day for everything, right? Most of everything in the green. Couple little outliers here and there, such as Meta, UNH, Amazon, and Broadcom here. But for the most part, big tech and software performing nicely. Defensives, industrials, the bottom half of the market, also performing quite nicely, as there was some pressure that was eased off of the bond markets in the past few days. So those defensive sectors really came back alive, even the interest rate sensitive ones, such as real estate and utilities, right? Financials also performing well after their earnings, holding the gains from Friday into today as well, although JP Morgan had a bit of a pullback. And even healthcare coming alive. They've been very weak in the past few weeks, as the rest of the market has been, but nice to see them with a bright green day overall. On the one-day relative performance, you can see that everything was in the green, led by real estate and utilities because of that relaxation of the sell-off in the bond market, defensives, and healthcare. So a lot of your value rotation trade was front and center, top of the markets today. And then, of course, everything was still green on the 1 week relative after the massive Wednesday candle in which we saw a delay in tariffs by 90 days. We are now sitting largely positive across all different sectors of the market. So the bounce still continues. I know some of you may be jaded. You might think it's a dead cat bounce. We're going to review the technical analysis and see what we can be looking at possibly for some longs, for some shorts, and anything in between. Now, before we do that, though, we're going to get into the bank earnings, guys, because we had a lot of bank earnings last week. We had JP Morgan, which from the Friday session were actually up. We had Wells Fargo Corporation, which from the Friday session are relatively flat. We had investment banks such as Morgan Stanley, which were up. And just this morning, We had Goldman Sachs too. Special shout out to BlackRock as well, the ETF manager and ETF provider. They were also up after earnings as they saw, I mean, record amounts of just trading. And that company is all about fees, right? So exactly what happened? We're going to go through one article here that pretty much sums everything up, all the thoughts from all the major banks combined. And then we're going to look at the liquidity ratios of the banks. And I'll give my thoughts as to which one of these institutions could be possibly a very interesting buy for the long term, or maybe even for some swing trades, and which levels I'm looking at that overall, yeah? So here's the article. Let's go through it real quick, shall we? Goldman CEO Solomon, this is from today, says prospect of a U.S. recession has increased. Now, we know that the recession odds from Goldman Sachs have upticked from 10 to 15% a month ago, now all the way up to 60%. JP Morgan, well, as recently, you guys saw, right? Goldman Sachs rescinds. I only need to put the word rescinds in here, and you'll see, right? They rescind their recession probability, right, down from 60%. So overall, they still do see hard economic times ahead, possibly if these tariffs are maintained for long enough. Let's get into the article, shall we? So David Solomon said Monday that the prospect of a recession has increased amidst the uncertainties of a trade war and the new challenges facing CEOs who are unsure about how to plan for the future. And you will see, unsure about how to plan for the future is going to be the crux of the argument here, this entire article from all of the major banks. The CEO warned of more challenges to come, saying in a statement Monday that we are entering the second quarter with a markedly different operating environment than early this year. Very logical, a lot more uncertainty right now, right? Economic growth had been slowing down even before the new trade policies from the Trump administration, and the implementation of those policies resets the prospect of forward growth pretty significantly all around the world. Very natural as well, as people become more and more isolation mode right now, right? Not wanting to take on too much risk and not wanting to invest a lot of capital abroad. The firm's corporate and investing clients, Solomon added, are concerned by the significant near-term and longer-term uncertainty that has constrained their ability to make important decisions. And the uncertainty about the path forward amounted to material risk for the U.S. and the global economy. The prospect of a recession has increased with growing indications that economic activity is slowing down around the world. Now, he's not wrong. We noticed a contraction in GDP from last quarter to this quarter. It's on a downtrend. Is it recessionary? Not quite yet, but he is right in saying that even us on the channel, we've been noticing that GDP has been coming incrementally down from its highs, right? Now, moving on further, overall, for the profits of the bank, first quarter profits at Goldman rose 15% from the year ago period to $4.74 billion. Revenues rose 6%. I'll remind you, Goldman is an investment bank. They do not deal with everyday clients, right, for loans and stuff like that. No. Only mergers, acquisitions, and large deals, and investment banking services such as money management, but also in terms of just a lot of deal making and trading fees as well, yeah? Deal making pulled back. Fees from investment banking dropped 8% from the year ago period. Advisory revenues earnings earned from helping companies with mergers and acquisitions were down 22%. Nobody wants to come to the table nowadays in terms of those M&A deals. Equity trading, however, rose a record 27%, and total trading revenue was $8.6 billion, Goldman's best quarter since it earned $10 billion in the middle of 2009, right? Very obvious. A lot more volatility, a lot more trading in both directions. Here are your investment banking fees from last quarter to this quarter. JP Morgan performed quite well. Goldman Sachs had a drop. Morgan Stanley had an uptick, but less of an uptick than at the same period in time of last year. And tomorrow we get to hear from Citigroup and Bank of America as well. So investment banking is a mixed bag, but you can clearly hear from the comments of the Goldman CEO that it's a bit of a murky environment, a bit of a cloudy environment moving forward, right? Trading revenues are up all across the boards. More volatility, more trading in both directions, which does advantage some of these institutions, right? So net trading was up, which helped boost profits. JP Morgan, very healthy uptick. Goldman Sachs, very healthy uptick. And Morgan Stanley, a very healthy uptick as well. We'll get to hear from Citi and Bank of America tomorrow, but I would not be surprised if that's going to be the same thing as well in terms of trading. Keep in mind that for Bank of America and especially for Citigroup, the investment banking divisions of those corporations are less than they are for JP Morgan and Goldman. So we'll be more focusing on the trading and net interest income. Net interest income, the demand for loans is going to be far more important for the retail-facing banks such as Citi and Bank of America tomorrow. Moving on further, JP Morgan, what did Jamie Dimon have to say? He said the economy faces considerable turbulence, even as his bank reported a rise in first quarter profits, and that investment banking clients have become more cautious amid an increase in market volatility driven by geopolitical and trade-related tensions. Fairly logical, right? BlackRock CEO Larry Fink told analysts that the sweeping tariff announcements went further than I could have imagined in my 49 years in finance, and warned the implications could be widespread. Fairly logical as well. We've been talking about this on the channel for the last 3-4 weeks. Now, the Financial Times reported this week that hedge funds were receiving the steepest margin calls since the 2020 COVID-19 crisis. Even without a recession, an economic slowdown sparked by a trade war could strangle M&A deals and demand for loans. Very obvious, it's a self-fulfilling prophecy. If you expect there to be a recession, are you going to go out and buy a new car at 7% interest? You're going to go out and take that $600,000 mortgage at 5, 6, 7% interest? Probably not, especially when the concern is possibly losing your job. So that's why the projections for net interest income, loan demands, and big deals, which provide those juicy advisory fees for these banks, the guidance on those is lower. I am of the view that we are still on pause, said Morgan Stanley CEO Ted Pick. We don't know whether the economy is going to contract. We don't know what the rate of inflation will be when the transmission effects come through. I've been very vocal about this on the channel as well, guys. We don't know, nor do the major bank CEOs, who have millions of dollars to pay economists, analysts, and teams of tens of thousands of employees to give these reports to them. If they don't know, we don't know either. It's very easy to say that tariffs are going to cause this. A trade war is going to cause that. Yes, we know that the logical cause and effect is going to be that everyone is going to be weaker. But how much weaker? How long will it last? The pinpoint nuts and bolts of those arguments, nobody knows, guys. That's why they as well are giving very timid guidance. However, the numbers are what they were. They were fantastic for last quarter. BlackRock beat on EPS by 12% and fractionally missed on revenue. Taking a look at JP Morgan, record profits for last quarter, beat on EPS by 10 and revenue increased by 3% as well. Goldman Sachs just this morning, same concept, massive beat on EPS and a very nice bump on revenue too. So as you can see, Wells Fargo, lastly, Wells Fargo, very nice beat on EPS and a marginal miss on revenue. So the profits are up at these banks, but the guidance is somewhat very cloudy. Now, Goldman as well today did a $40 billion approval in terms of stock buybacks. Guys, their market cap is only $160 billion, right-hand side where my mouse is right now. That is nearly 25% of their entire float. Now, obviously, it is a multi-year approval for buybacks, but still, that is a ton of buybacks. Just goes to show you how much profits Goldman has made, which obviously raises the question. If they're concerned about liquidity, would they be doing $40 billion of buybacks? Probably not. So liquidity is not a concern, at least not for Goldman Sachs. Let's take a look a bit further if liquidity is a concern for other banks too. Wells Fargo here, they set aside $932 million as provision for credit losses, which included a decrease in the allowance for credit losses overall. That's how much they set aside. So you guys know how these banks work, right? They obviously know there's default risks to some of their loans. How much money are they putting aside in the face of possible an economic downturn? Are they putting away more money, less money, or the same at the same pace that they have been as of recently? That is the clue to let us know how worried are the banks moving forward. Before we get into that, I'll just give you some headlines here from JP Morgan. Their revenue was up 8%. As we saw, revenue and EPS was very good. That's not what I want to show you right now. We're going to get into the actual liquidity ratios of the banks. How much are they well capitalized and by how much? And additionally, right, do these banks see the need to set aside more reserves for credit losses? Here is JP Morgan. You can see the build versus release here. Firm-wide are only up by $1 billion, guys. That's it. You would think that if the banks are extremely nervous about a credit crisis, a liquidity crisis, and consumers defaulting on their loans by the tens of thousands, by the millions, they would be building these reserves for credit losses a lot more aggressively than they are right now. So as you can see right here, not too much of a build in place. Now, of course, this first quarter ended just recently in the month of March, but they would have had the time to do that so far, right? So keep that in mind. They would have had time throughout this whole tariff stuff, January, February. They would have adapted. So far, they have not adapted. Very, very, very small increase here overall in the first quarter for total reserves right now of 27.6 overall. Very small increase for credit losses. Same thing in Wells Fargo. We'll take a look at that very shortly. Now, is the bank well capitalized? Well, we are provided with 3 different capital requirements for banks. One has to do with their equity standards. The baseline minimum, regulatory minimum here, is 9.8%, right? What this measures essentially is a bank's capital against its assets. A very fancy ratio, but still quite simple to understand. All you need to know is, are they above or below the regulatory minimums? You can see they are 1.5 times the regulatory minimums. You can see them here. Wells Fargo did a good job of pointing them out in their own respective earnings. Let me just, juggle across the charts right here. Here's your CET1 ratio. The regulatory minimum is 9.8. Well, may as well just tackle it when we're on there. Wells Fargo, well capitalized, above the minimums on that liquidity metric. Jamie Dimon's firm right here, 1.5x, the regulatory minimum. Very good. This is another leverage-based capital metric. I don't know why it just highlighted the entire batch, but anyways, the SLR, widely looked at metric. What is the regulatory minimum? I'm glad you asked. It's 3% set by the Federal Reserve. This is another method of measuring a bank's liquidity structure. Are they liquid? 6%, double the regulatory minimum. Liquidity is not a problem for them. And now the last one, the LCR, which is a third liquidity metric, which is how much capital does the bank have for the next 30 days of its own obligations? Does it have enough cash and or liquid marketable securities, things that it can sell tomorrow if it wanted to cover 30 days of net outflows? That's what the LCR measures. It has to be above 100%, right? Above 100%. Oops, I just highlighted this in case you guys wanted to just read it right there. But the requirement is 100%, essentially. They cannot be below 100%. That is just the law right now, okay? 113% for Jamie Dimon's firm in terms of JP Morgan, yeah? And as we saw, they're not setting aside that much more money for provisions for credit losses. So not too nervous about customer defaults, and they're well capitalized. What about Wells Fargo? Well, I'm glad you asked. Let's take a look right here. So net interest income, this, as we said, the demand for loans, guys, the bank's bread and butter, is going to be somewhat on the rock, somewhat cloudy for the next year for all of the banks, guys, right? The demand for loans is very tough to predict because you don't know if you're going to go into a downturn. More downturn, right? Even with rates coming lower, guys, if you go into an economic downturn where there's going to be job losses, even if you cut interest rates, it's not going to instantly stimulate demand for loans, right? People are worried about losing their jobs. It's just very logical, yeah? So moving on to here, in terms of credit quality, net loan charge-offs, have they uptick recently? No, they've actually downticked in the most recent quarter. Very low amount, right? Allowance for credit losses for loans, have they upticked it significantly from the last 5 quarters? No, it's actually lower than it has been in the last few quarters. So obviously, maybe the banks are late. Maybe they're under provisioning for these credit losses. But then again, guys, like, trust me, they have tens of thousands of employees. They have algorithms. They have models. They know how to run this stuff. They know the credit worthiness of all their clients. And they also use a lot of economic data. If they are not nervous, maybe it's telling us something, right? That maybe this is all blown out of proportions as of recently. Capital and liquidity. We obviously saw that their capital are meaning in terms of the CET, in terms of their capital structure, it is pretty good. I can't find so much the LCR here if we're looking. I think I can find it somewhere in here. Anyways, all you need to know is liquidity coverage ratio right there, 125%. Well above that 100% minimum requirement there. So very good, guys. Very good. So as we can see, that's all I wanted to go over for the banks. There's tons of stuff to cover for the banks as always. But the 3 main key things from the banks, just as a summary, right? Number 1, the banks are well capitalized in the event of a liquidity or credit crisis that could possibly afflict them, right? That is number 1 and arguably the biggest one, because that just tells us that we're not even close to having a same situation as 2008. Not even close. Not even a fraction of being close, yeah? Number 2, what about the guidance? How do the banks feel about the deal making in the future, right? And deal making goes a long way. You're talking about IPOs, mergers and acquisitions, but also these guys have access to a lot of wealthy clients, right? People that are considering opening factories, opening different tech companies, opening XYZ different things. If they're nervous and they don't want to commit the capital, it just shows you that the capital now is going to move more slowly, right? Not so much in an expansive state of capital right now, more in a kind of protectionist state, right? That's number 2. Number 3, of course, is the loans. What's going to happen with net interest income? Are banks going to absolutely fly to new all-time highs this year because they will be generating record amounts of net interest income. Well, no, if people are nervous about taking out loans, well, you cannot guarantee that the loan demand is going to be strong, even if we are in a rate cutting cycle right now. Because of the prospect of an economic downturn, people will be a little bit more nervous, a little bit more cautious, and a little bit more timid about the amount and of loans that they take out and what they take out loans on, right? When people think that a recession is coming, they're not going to go out there and do some big ticket purchases such as buying houses by the dozens, buying cars by the 2, 3s, and 4s per household, appliances, furniture, any large ticket items. Yeah. So demand for loans overall is somewhat of a toss up this year. So that's why I'm saying the banks are still healthy, but maybe we cannot expect to have similar performance in the last 2 years where JP Morgan 2x'd as we can so in the next 6 to 9 months. But are they a bad investment? No, but can we be patient and maybe looking to accumulate some shares of your favorite banks, whether that is JP Morgan directly in or around the lows, 20 to 25% off its all-time highs? Not a bad proposition right now. Or maybe a company like BlackRock, which makes a lot of its money from trading fees, and it was also down 25%. If we can accumulate some shares, if you like this company, down below in the technical 200 weekly EMA, understanding that their fundamentals are not eroding so much, and that's a very nice discount, the answer would be yes. But as I've always said in the last 3, 4, 5 weeks, guys, we have to do it slowly because we don't know what this year is going to bring. It's going to be very volatile in the markets. It's a good time to be building long-term positions in some of your favorite companies if those are financial institutions alike, or if you just want to go with the XLF ETF, guys, be very cautious. Go with levels, right? Wait for the markets to come to you and build these positions slowly. Look at these monthly timeframes, yeah? Looking for some monthly higher lows. If we revisit these, fantastic opportunity to buy them again at the 2021 all-time highs. That is everything that I wanted to cover in the banks for their earnings, right? We'll do more tomorrow with Bank of America. Mind you, in terms of earnings tomorrow, Bank of America, Citigroup, Johnson & Johnson, Interactive Brokers. Then we have the big ones, guys. Wednesday, ASML, front and center. Thursday, TSMC, United Healthcare, American Express, and Netflix. So we're getting some very big ones coming up on the table this week. I will take you guys through each and every one of those, the biggest one of the bunch, and we'll determine whether all of them or some of them are buying opportunities or whether or not we should stay away. That's it for your earnings segment. Now let's dive into the charts, shall we? Okay, so the last time we saw each other was on the Thursday session, and we were saying that we were looking out for the higher lows, which was the Thursday session, and now making an attempt for the higher highs. The bulls are on the verge of trying to go for a daily trend change. When's the last daily uptrend? You would have to go all the way back here, and now we have a very juicy bounce underway. But keep in mind, guys, overhead resistance is very strong. This is all the resistance from before. That for the SPY is going to be 550 down to 565. Now, in terms of the weekly structure, guys, because last week's candle was so massive, I really would not be surprised in light of the shortened trading week this week that we maybe have some form of an inside week with yesterday's trading, which sometimes people don't like it because you cannot break clear structure, right? You have overhead resistance and the lows of the daily higher lows are a significant ways away. They don't look that far, but I mean, keep in mind, guys, like these are big candles, right? Especially Thursday. That's like 6% away. The SPY usually does not move that. And now that we're down off of a highest amount of fear uncertainty, fear and greed is now off their lows of a 4. It was a 4, right? And now also the VIX is, we'll take a look at that lower, but the VIX is off of peak uncertainty. Well, maybe you're not expecting tremendous amounts of news unless President Trump somehow decides to cancel the 90-day tariff pause. I'm pretty sure we're through most of the craziest days that we would have had in the last few weeks. So this week of trade might be a bit more muted. That being said, if we retrace to the downside, your key level is down here, guys. 509. Cannot break that. If we devolve into some form of a tightening range, trapped between resistance and support, that's not a bad case scenario. That's just an accumulation range for the market. So we'll see what happens. But overall, I am expecting some form of an inside trading week this week. How do we play it? My favorite way of playing it, while the VIX is still high and direction is somewhat unclear for the near term and the medium term, is selling puts towards the lower end of the fear lows overall. So we will keep an update on these charts as we move through the rest of the week. Now, the QQQs, same concept, right? They are trying to go for a daily trend change. Higher lows are set at 433 right now, which is a significant ways away lower from the current price. It's about 5.5%. So we are trying to go for the daily trend change. Today was very much a gap open, fill the gap, and then just hover around and do a whole lot of nothing, right? Very boring day compared to what we got last week. But if we clear the Wednesday highs into resistance, that would be an official daily uptrend shift. Overall, the weekly move is very sizable right now, too, on the Qs. Taking a look at the fibs, this now at this point is a, let's call it 70% retracement. So even if you lose this daily uptrend attempt and devolve into a daily downtrend, the bulls have a lot of space here, guys. Set up some weekly higher lows into support, which is 447, call it 450, down about 425, yeah? Set the weekly higher lows and try to go for a weekly trend change amidst all of these earnings, which are going to be front and center for the month of April. How do I like to play it when we're trapped between resistance and support and a very volatile range of trading? You guys know the answer. When the VIX is high, I love to sell puts at the lows of the market overall, and also just bid companies for the long-term portfolios that maybe have not rallied as much as the respective indexes. What I'm saying is identify the lagging plays, and I'll show you some of them when we go through my portfolio. Moving on to the XLF right now, same concept, rallies off the banks. The higher lows are now set with the lows of Thursday. 44.60 are your higher lows, and the banks almost eclipsing the highs of Wednesday. However, we are into resistance right now, 48.31 down to roughly 46.75. I will gladly close the support box green because now we are above that range. The below support stays put down there, 45.78 to 45. Now, this is the tiny little trading range from all the way back there in September, but looking good. They want to go for the trend change. But if we get trapped in a sideways week pretty much, and we just devolve into here, pay special attention. As long as we don't crack this guy, it's just some form of a tightening range accumulation zone between resistance and support. Obviously, you'd like to go for the expansion. Looking for the weeklies, guys, the weekly bounce is very healthy on the XLF as well. 618 bounce. So even if we start retracing a little bit, the bulls do have a chance of resetting into a weekly uptrending structure if the markets can be so kind. My favorite way of playing this, selling puts, as you guessed it, towards the lower end of the range. Since the price action now is unclear, obviously the bears control this trend. You can go for a short if you want to. Just understand, you're going for a short here, but here is going to be heavy price action from the bulls as well. So you may, unless you get massive amounts of more fear in the markets, akin to what we had back here, maybe going for the absolute flush is not so obvious anymore, right? Moving into the healthcare sector right now, healthcare also with just a massive trading range, right? They're trying to go for the daily higher lows. It's very messy on healthcare. It's wide range of healthcare, right? The one thing's for sure, though, if they crack the highs of last Tuesday and Wednesday, it would be a daily uptrend attempt. You have a couple of equal lows here, going for the daily uptrend attempt, and then you'd be trying to really mount above the 12 EMA right there. It looks a bit clearer on the weekly. It's a weekly downtrend after the head and shoulders prophecy kind of got fulfilled into this wide range of support. I was telling you guys how tough it would be for the bears to just get through this without any reaction from the bulls. It's all the levels from 2022 and 2023. The clearest time frame here is the weekly, yeah? You're going for a weekly bounce in the context of a downtrend, keeping in mind that right now the size of the bounce is adequate, 50%. So even if you lose the structure right here and roll over, the bulls do have a chance of setting up some higher lows and going for that trend change, keeping in mind we are in or around the 200 weekly EMA. And normally, healthcare is a more defensive sector. When it touches its 200 weekly, just go back in time. For the last 15 years of trade, it is usually a short-term bounce buying opportunity. But if you're looking to sell puts under the market, right, well, you'd be trying to target this area down here on the XLV, banking on the fact that all these guys are support. You have the 200 weekly EMA for our favorite health companies in the market. Moving on to SMH right now. SMH only up a fraction of a percent here, 0.15. They're trying to go for the same thing, yeah? Trying to go for the daily trend change with the higher lows of Thursday. How do you know that these are the higher lows, guys? Well, I've been very clear about this, right? You need to watch when they recapture the hourly uptrend, yeah? We got a nice hourly uptrend shift right here. Then they lost it temporarily, accumulation range, reset the hourly uptrend. Now we're back at it, yeah? So this is your daily higher low right now at about 189.64. So you don't want to lose this level. If you lose this level, guys, right, it's just going to be an unravel. It's going to be failed daily uptrend attempt and back into a daily downtrend, right? We know overhead resistance is set 216 up to 232. That being said as well, guys, the weekly, who's in control here? The bears, they're still in control. However, going for the absolute flush and trying to get through all of your fear lows may not be such an easy trade as you may think if you're just looking at the technicals here thinking, oh, I'm just going to short the tops here, and for sure it's going to absolutely flush. Well, if you cannot replicate the same amount of fear that you had at the midpoint last week, we had a few key things come into play here, guys. Do not forget, we had a Trump put, meaning that Trump canceled the tariffs when he saw the markets were unraveling a little bit too fast. That's what you call a Trump put. It's an insurance, right? He provided insurance for the market by backstopping them by taking his foot off the gas on tariffs. But also on Friday, Miss Susan Collins from the Fed, who is a voting member, said that the Fed would possibly backstop the markets. Now, we knew that that was always going to be the case. It was fairly obvious that they would, right? But just for someone, a voting member on the Fed, to disclose that information, right? Fed Collins, right? Market. Let me just you can spell the headlines right there, right? Federal Reserve is prepared to intervene if liquidity issues arise. Now, she is a voting member, guys. It's very important, right? That is synonymous with some sort of a Fed put. You think that she would just say that on her own? Probably not. So you can obviously understand what's being discussed by the Fed members behind closed doors, right? We got two things last week. We got a Fed put and we got a Trump put at the same time. So maybe getting through these fear lows, somewhat questionable, right? Maybe it does happen, but the trade short just became a lot more difficult to actually get through those levels, yeah? Weekly downtrend is fully in the bear's control. The size of the bounce is quite nice, though. Take a look at the fib retracement size. It is a almost 618 bounce, as you can see right there. So the bulls do have some space now to work with if they have to two-step this process before making their way into resistance above us, and the support lines below remain the 200 weekly EMA at 178. Very rare that it gets tested, and the actual big support zone 160 to 140, but a lot of space between us and them. Moving on to the IWM Russell right now. The Russell was up 1.18%. Same pattern, guys. Trying to go for the daily trend change. The problem with all these charts is that the daily trend change is trying to be made into big resistance. For the Russell, that is 190 up to 200. It's a very, very big level overall, guys. You can clearly see that, right? Resistance for like a year's worth of time. Support from the markets back there. It's a very big level, so it will not be easy. But the bulls are trying to go for it. If we get rejected, pay special attention. The higher low, 177. If we come back there, well, we'll be trapped between resistance and support. It's going to be choppy, right? Now, this is big support, guys. Really big support. It's the lows of 2022 and 2023. That is 178 to 164. If we come down a little bit more, can we maybe write some puts on the Russell conservatively while being in weekly oversold? Sorry, my big head's in the way. While being weekly almost oversold in the RSI? Yes, but be very careful and make sure you actually want this trade, because the bears are still in full control of this chart. It's a nice bounce, but nowhere close to the size of the bounce from other indexes, because growth is the main concern right now, yeah? Only a 38% bounce as of right now. It got up to 50 with last week's candle, but we gave a lot of that back. It is the weakest bounce out of the bunch, but if it does give us another entry opportunity, I wouldn't be opposed to writing some puts on the Russell down there. Wouldn't be opposed to it. If you guys want to be so risky as to play TNA under the same premise, yeah? Well, please play it, well below the markets, and do not play these too heavy at all, guys, please, yeah? Moving on to DJI, Dow Jones, right? Dow Jones with a very healthy bounce, also trying to go for the trend change. The higher low is the low of last Thursday, 38,500, let's call it, into our support zone. Support zone is very clear. It's the mid-range point of the May and June sessions of 2024, and the bounce came right into that 200 weekly. Very, very attractive bounce out of an indicator that very rarely gets tested for the Dow Jones. That being said, they're trying to go for it, but into resistance, right? 41.3 down to about 40,000 is that resistance range. It's the top end of back here and the lower end of support back here. Tough to get through that, right? But on the weekly, so even if we devolve, yeah, into a tightening range between here and between here, not the biggest of a deal, because the bulls put in a very nice bounce. We know the control is to the bears. That is very clear and obvious, right? But look at the size of the bounce. The size of the bounce has been very healthy so far. Over a 618, like almost a 70% bounce. So even if we consolidate here for a while, not the worst. It gives the bulls a lot of space and a lot of time to maybe set up for a trend change and put an end. Especially, it's going to be tough, guys, to get through the big fear catalysts, right? And now that's pretty much it for your index recap. Let's move into the VIX right now. The VIX coming back into its 30, which for all intents and purposes, you can use SNR, support and resistance, right? It's usually, the top end of the VIX move. But as I said, right, the market's going to be volatile. We know that every day something new can happen, which can spike the VIX, drop the VIX, spike the VIX, drop the VIX, right? I think it could be an environment where the volatility stays relatively high, between 25 and 35, maybe for the next few weeks, as we get more developments on the tariff situation, more developments from earnings from various companies, and so many other news headlines that can hit the markets at any given time. You can see that after COVID, right? The VIX stayed high after the huge spike. It stayed high for like 6 months, a year, yeah? 2022 bear market, it stayed high for like 6 months to a year. The great financial crisis, same concept, right? Whenever you get these crisis events, the VIX doesn't just need to collapse to zero in one day. It can stay elevated for some time, which is great for us as option sellers, but also for buying for the long-term portfolios. Whenever the VIX is above 30, guys, eventually, if you have a long enough time horizon, 1, 2, 3, 4, 5 years, the buys have always been rewarded, right? So don't focus on the fact that, oh no, I didn't buy, I missed the bottoms. It's fine. Just nibble, guys. Just keep nibbling, upside, downside, DCA with every single paycheck, right? 10% of your paychecks should be going into any investments, whether they're ETFs or individual stocks. And when the VIX is high, it tends to be a better buying opportunity than not. Moving into, or sorry, have to cover yields as well. Yields down on the day as the bond market starts to recover after that Fed put was put in place in terms of the Friday session. You can clearly see the reaction now, right, in terms of the backstop. So now maybe yields coming down a little bit, but the damage has been done, right? It's a very, very wide range now. We knew we were looking for the head and shoulders rollover. We got it, and then the bond market started blowing up. It's going to be a very choppy trade moving forward for the 20-year yields as well. We had it, the head and shoulders rollover. We got it, and now just too much uncertainty surrounding the bond market. So this is going to be a very difficult trade, but I still do believe, guys, I still do believe that TLTs are underpriced. Now, we're going to have a long-term time horizon for this. It's nice to see that the Fed will be able to use their balance sheet, and I was hinting at that all of last week as well. If they're forced back to the wall, they will use the balance sheet, guys. They'll start buying U.S. Treasuries, no doubt about it. And in my mind, when they start buying that, everybody else will follow. So I think this is still a very undervalued trade, but you got to put a lot of time on this trade, guys, a lot of time. And sure, if you want to go for the TMF, the 3 times leverage on it, yes, but be careful, guys. It's going to be very choppy. And, you know, these 3 times leverage trades, they do not like chop. Whenever it chops around sideways, these just kind of drift to the downside. So be very careful with your sizing for TMF, please, okay? Moving on to the gold trade right now. Well, gold actually came down a little bit yesterday as we have a bit of rotation from safe havens down towards equities. Now, gold, one of its 3 days, the best rally it's had in years and years and years in a 3-day time span. Now, it is somewhat overextended. You can see the bearish divergence on the chart right here. That usually does point to a bit of a rollover coming on gold, but we have not really lost the 1-hour time frames just yet. Tremendous moves. If you see some hourly downtrend follow through, you know that this daily move higher is possibly done and might be going back down into the highs, which is 3,100, 3,130, into the 12 EMA as well. That would be the likely area of retest from gold. On the weekly, guys, this is just like, it's the moonshot on gold right now, yeah? I'd be very, very hesitant on gold, especially at weekly overblown RSIs. It's been a fantastic trade, but if you're buying into gold right here, expecting the absolute moonshot when we're through peak fear and peak volatility, you might be disappointed with the degree of how much it can rally. I'm not saying it can't rally more. It can definitely rally more. But are we looking for like a 2x on gold from here? You know, you got to taper your expectations a little bit. So be careful on the position sizing, especially if you're not waiting for pullbacks. You know what I mean? That's all I'm here to say. You know, nothing's ever black and white. It's all gray, and it's all about position sizing and risk to reward, right? Moving on to Bitcoin right now. Bitcoin's surprisingly holding up fairly well, right? Same concept. Nice little expansion leg, trying to set up the higher lows. And this is some form of an inverse head and shoulders that's forming. The only problem is that if we get a rally, it's right into resistance. 93,000 down to about 87,000 is the mark of resistance. It was support for a long time, then became resistance for a long time as well. We'll see if Bitcoin can get it done, but they have set some nice lows, and I'll give them that. It was a very nice bounce off the lows, even though the bears are still in control here of this weekly downtrend. This bounce on the weekly is quite an adequate bounce, all things considered, yeah? From the bottom to the top, it's now at 80% retracement. So maybe just as the rest of the markets, if we can't get it done and engulf and change the trend and the markets just go back to, you know, expansion mode, if we stay range bound, it's pretty clear where we're going to stay range bound in, right? We're going to stay range bound between here and the lower end of support, which is like 73 down to 67. So truly, you want to be buying down here and, you know, selling these swing trades up here. Or if you're trying to short, the shorts are here with a tight stop loss above these highs. You're going for a little bit of a retracement down into the lows down there, right? So Bitcoin could be a bit of a bumpy trade, but adding Bitcoin, guys, anywhere here, if you have like a 2, 3, 5, 10-year time horizon for Bitcoin, if it's a long-term investment for you, it's not a terrible proposition, but just go slow, just as any other asset in the current markets right now. And same goes for altcoins, guys. just go very slow. That's it for your sector rundown, the bonds, the VIX, the Bitcoins, the golds of this world. Now let's move into big tech, shall we? So first off, moving into Apple, 2.21% to the upside, but Apple off of that electronics news at one point this morning was up 7.5%, but it did clip into resistance and the bears sold it down. 211 up to 222 is a big resistance point. It was support for the bulls for a very long time, and now unfortunately it is the opposite. It is now resistance. But nice to see that Apple is one of the first candidates that has officially set a new daily uptrend. The higher lows are the lows of Thursday, 184.33. The bulls have now tons of space to come down and reset for another higher low and possibly make a second attempt at smashing through this resistance. The support level below remains 196 to 187. If we come down into this range, guys, I'll gladly write short puts into the bottoms again as I'm trying to target the fear lows and any swing trades as well. If we come down a little bit more, very simple. Your stop loss goes below the lows. You're targeting expansion into these highs. That is your risk reward profile for some short-term swing trades. For long-term investments, well, it was a much better deal back here than it is right here. All things considered, it's not terrible on Apple. They are growing revenue very slow. They do still have a fairly rich valuation. At the end of the day, Apple is Apple. Although it's not, akin to its former glory in terms of growth and in terms of innovation, at the end of the day, it is a backbone of the S&P 500. Buys at 200 here for a long-term portfolio. They're not terrible, especially if you're starting a portfolio and you like Apple. There's nothing wrong with it. Just make sure that you have some money to DCA because truly the best location is down here, into the lows of 2023 and into the highs of 2022 as well. You want to get the best possible price. But Apple setting the daily uptrend, decent opportunities for some swing trades moving forward. Moving into AMD right now. AMD also trying its best to set the daily uptrend, not able to crack above the highs of Wednesday. Quickly moving into resistance, 113 down to about $98, which is the big level, guys, that we took a while to smash through, but they did smash it to the downside. Keep in mind, who's in control here? Well, it's your weekly bears, right? No weekly uptrends in sight. Trying to set the lower highs, the weekly time frame. I should have done this on Apple. I'll do it tomorrow, but only a 50% bounce. So the door is wide open for either party to take control. Keep special attention to your higher lows as no daily uptrend is set. If you flush them without making a new high, it is daily downtrend again for AMD, and you are banking on the support range to play as defense 83 down to 61. The way I like to play this, guy, is very simple. If you're trying to do a long-term portfolio buy for AMD, I have some shares in the long-term portfolio that I'm building with you guys on the channel because I think it'll have good velocity moving forward, yeah? It's not my favorite semiconductor play, but I think it's one that has a lot of catching up to do. The valuation is quite manageable at only a 20 forward price to earnings and only a very cheap 0.7 PEG ratio. The revenue growth and EPS growth, I mean, the logic for AMTSM, logic for AMD is quite simple, right? They will get a piece of that data center pie, and it'll be very good. It will have the best years of revenue and EPS expansion and free cash flow and margins in the company's history in the next few years. You just got to give it time and let it cook, right? If you're trying to swing trade this, very simple. You really want to target the lows. The stops at that point would go below this low right here, trying to go for the daily uptrend expansion if they can't get it done from here. Or if you come down here and you're looking to sell puts, well, you want to write close to or below the fear low. So just be patient. Don't trail it up too close, guys, right? You really want to be patient and let the stock come to you. Moving on to Amazon right now, down 1.49%. Amazon struggling, right? They're trying to set a sequence here of higher lows and possibly go for the daily uptrend shift. The higher lows is the lows of Thursday at this point, which are 176.56. Why? Well, because this is the time that they kind of almost consolidate. They lost the daily uptrending pattern, yeah? They got it, then they lost it, and now they're trying to get it back again. So your higher low is here, which is why I say it is the Thursday candle overall. You flush these lows, no problem at all. That is daily downtrend, but you do have a big range of support below 173 all the way down to 144. It's a big range, I know, but why do I include all of it? It's all of these guys, man. And the bears are not going to be able to get through all of these guys very rapidly. However, it just lets you know the margins that I'm looking for here. Sure, is Amazon a good buy down here at the lower 170s? Yeah, but keep some capital so you can buy this entire range of support, which was the culmination of the August carry trade lows and the 200 weekly EMA as well. If we're looking for this one for a swing trade, it's pretty much live. You'd be targeting this as your stop loss, this as your local high, and that would be a swing trade, right? Up to local high, tight stop loss. That would be roughly a 2-to-1 trade for a short-term swing trade. If you're targeting short puts, very simply, guys, target the lows of this area. I'm in this one already for this week at 170. I'm targeting the lows because I want Amazon down here, even if it's in the context of still a weekly downtrend. This is a very nice bounce, right? Very nice bounce. Bounce size right now is roughly a 618 bounce. So the bulls have a chance at trying to go for the daily uptrend shift, or at least building some form of a tightening range or an equilibrium range, however you want to call it. But looking nice on Amazon, all things considered. Moving on to Google right now. Google also one of the candidates that is now setting a new daily uptrend. The higher lows is here, the lows of last Thursday. So any pullback looking for a higher low, anything above 152 looking for that higher low for possible further trend continuation, unless they want to do it as of right away tomorrow. That being said, into resistance, all the same, 175 to 162. That's why it's very tough for me to chase things into resistance ranges overall. But Google's fundamentals right now, guys, are very cheap indeed, at around 156, 160, let's call it 17, 18 forward price earnings, dirt cheap. Crazy cash flows, very decent net margins, cheap price to earnings. You're not paying a lot for this growth on Google moving forward, but we know who's in control here, right? The weekly bears are still in control. Nice size of the move, though, on the fibs. It is a 61.8% retracement. So if the bulls want to, they can afford a little bit of a pullback, set a higher low, go for the two-step trend change, or they can engulf a bit more, which makes their job even easier if they want to do a two-step recovery process. How am I trading this one? Very easy, guys. I'm writing puts under the lows, which are the lows of the fear lows and also the highs of 2022. Very easy trade on Google, in my humble opinion. Google is still down from its all-time highs, 22%. Moving on to Meta right now, down 2.25% overall on Meta. Meta is lagging, guys. You notice that Apple set the daily uptrend. Amazon staying relatively close to its highs. Google set the daily uptrend. Which one has not? Meta. Meta is your lagging plays. If you like to find some lagging plays, Meta could be a candidate for you, considering the fact that they are, closer to the lows. Well, they're equidistant from the lows to the highs, right? Could be a lagging play, considering the fact we're coming into support. 530 down to 454 is huge support for Meta. I know it's a very wide range, but I'd rather include all of these guys because that, on the monthly time frame, is going to be the location that you really want to pay attention to for the bulls not to let go, right? That being said, looking for a higher low consistently, right? We don't have the higher lows set just yet. Still trying to set them right now. Anything above 485, looking for those daily higher lows for possible trend attempt at changing the daily uptrend. Keep in mind, though, above us is resistance 558 up to 597. Let's just call it 600 for that time. I've made a play on Meta. I'll show it to you guys where I'm going for the upside expansion overall. If you have a big account, you're looking to sell puts, no problem. Target the lows of this range and the lows of the fear as well. The weekly bulls are still, the weekly bears are still in control of this chart, quite obviously, yeah? Moving down, bottom to top, 61.8%. So the bulls have two chances here. Either set it from here or somewhat of a tightening range and then try to set it eventually maybe into their earnings catalyst, which is in the next 2 weeks of time. Meta's valuation is not terrible, by the way. At 531, where it is right now, it's about a 21.1 on a forward basis, which is very decent. Very healthy free cash yield as well. Tremendous net margins, but we know there's a bit of an overhang on Meta right now. If people forecast a recession, right, and companies that pull back on spending, what do they pull back first? Well, number one, you can say jobs. Yeah, it's fairly obvious. But number two would be advertising, right? They would pull back on advertising spend if they want to protect their margins. So that's why there's a bit of an overhang right now on Meta. But a good opportunity nonetheless, guys. Fantastic company. For a long-term portfolio, next 3, 5, 10 years, Meta, I think will do fantastically. Moving on to Microsoft right now, down just under a fraction of a percent, right? 0.16%. Not the worst day for Microsoft, but also not the best either, right? Microsoft, big engulfing move. This is a 100% engulfing move with Wednesday's candle. Thursday is your higher low right now, set at about 368, and you are going for the trend expansion. Only problem, like the rest of our charts, is it's into resistance. 408 down to 393 is the mark for that resistance. We also know that below us is juicy support, 378 to 363. So if the bulls cannot get it done and give me that daily trend change, if we just kind of oscillate here and kind of form a range between resistance and support, not a terrible proposition. They did it for like weeks back here, right? If we trend towards the lows very easily, we can write short puts below the lows down there and possibly even fire off some swing trades if we're going for, the lows down here with the stop loss and then trying to target upside for some expansion for the take profit on the weekly, guys. The weekly also, Microsoft has been in a downtrend for a very long time at this point, but Microsoft, one of the best weekly bounces in the game right now. This is a 100% engulfing move. So the bulls clearly, even if they lose the daily uptrend, right, they clearly have a lot of space to work with here to set the weekly higher lows, Maybe they can get it done in one shot for the weekly trend change. Maybe it takes them more time, but they have a lot of space above those weekly lows. If I'm looking to write puts, very simple. I'm looking to write puts at the lower end of that range. Fantastic fundamentals. It's Microsoft at the end of the day. Netflix, they have earnings on Thursday. So I'm not expecting a tremendous amount of movement by Netflix until Thursday, right? Possibly just going to stay range bound. I'm not expecting big flushes of the lows by Thursday. I'm also not expecting crazy rallies beyond all-time highs. It might just stay muted. So the one thing you'll have to look at for Netflix, guys, is, well, they're no longer reporting subscription counts, of course. They'll report some things, but, we have to compare against the record quarter of Q4. The one thing will be comps. If the comps are difficult, which they are right now, Wall Street may not like it. It may be fantastic earnings, but the earnings may just come down. Pay special attention to this pattern right here. Head and shoulders. So far, it's not fulfilling the prophecy. But if Netflix earnings are bad, you would not be surprised to see them trend back towards their lows. I don't think their earnings are going to be bad. They'll be very good objectively if you take them in a bubble. But when you compare them against these crazy Q4 earnings, maybe they won't just be as good. But we'll see, guys. We'll see. We'll see their expansion of the ad tier subscription. We'll see what they're doing with live sports and everything like that, because now we no longer get the active subscriber count. I'm not expecting crazy things by Netflix. I'll keep my analysis short because it'll move a lot with earnings, yeah? I mean, I don't know how much, but let's just look at the expected move. It'll move probably like 6-7%. It usually always is. Take a look at Netflix right now. Yeah, so for Friday, it's about 6%, right? 5.68%. So 5.68% for the upside from here would be close to 1,000 again, but 5% to the downside could bring you towards the fear lows, which could be an interesting buy for a little nibble on some Netflix shares overall, right around that 200-day EMA. Moving on to NVIDIA right now, down about 0.2%. Not the best day for NVIDIA, not the worst day either, right? They started off hot and then kind of faded throughout the day. NVIDIA, though, setting up the same pattern as the rest of the market, yeah? Should be fairly obvious. Higher lows are the lows of Thursday at this point, going for the daily break expansion, which would be a break above the Wednesday high. If that happens, just understand resistance above us. Well, first, you got to get through the 200-day EMA, which is at 120. It's these guys, right? There's a little bit of a level right here, a little one. The bigger one, of course, is all the way up here, 125 to 133. It's all those guys, all these guys, resistance. Well, back then was resistance. This is support, of course. Very big level for NVIDIA, yeah? So if the bulls cannot get it done and lose it a little bit, you got to protect these lows right there and protect this daily uptrend attempt. If we devolve into some form of a daily downtrend, take a look at the weekly. Who's in control right here? Well, obviously, the weekly bears have been in control for a very long time at this current stage. However, the size of the weekly bounce cannot be ignored. Very healthy bounce, 80% retracement size, almost. So even if we do lose a little bit, the bulls have some juice here. They have some wiggle room, essentially. Try this up a higher low and go for the higher high. Upon a revisit of these lows, I will gladly write some NVIDIA puts into these lows, the fear lows, which are also synonymous to a big area of support starting off for them, yeah? 95 down to $77. I want to get deep writing short puts into that zone. Could be a juicy proposition, but right now, right, no confirmed trend changes. The bears are still in control, so we have to wait for the red days and write puts deep under the market. But the valuation on NVIDIA right now is not too bad at $100 roughly, give or take. It's about a 22, 24 price to earnings, 0.96 peg, the cheapest valuation NVIDIA has ever had. But I'll remind you what the concern for NVIDIA, right? What is the refresh cycle of their products? Because obviously, all of big tech, right, all the hyperscalers, they bought a ton of H100s. They're buying a ton of Blackwell units as well. But every refresh cycle, they'll be buying less and less. What do you think? They're going to replace all the H100s, $100+ billion every year, to the new generation, and then when the next generation comes out, they're going to replace all the prior generation? No. It'll be a percentage, right? So NVIDIA's revenues right now is going like this. It's still growing, but it's growing less fast. Their EPS is going like this because they cannot guarantee their pricing power as new competitors enter the market, right? You can see that here. It's not me, guys. This is NVIDIA's guidance itself, right? The EPS is slowing down. The revenue is slowing down. That's why NVIDIA has not had the same lift as it did back there when everything was exponentially growing. So keep that in mind. That is why NVIDIA is cheaper and why people are not just buying this stock hand over fist. Moving on to Tesla right now. Tesla as well, not a bad day, roughly flat on the day, holding between a range, same as the rest of the market almost, right? Between resistance, which is 260 up to about 300, big resistance area for Tesla. They're trying to set the higher lows and go for the higher highs. Lows of Thursday should be the higher lows, set at about 240. You break below 240, it's a new downtrend, but you got the fear lows down here into support, 220 down to 190. We've been trapped in this range, guys, since like early March, right? So it should be nothing new. A big battle underway right now. Big weekly downtrend. They try to go lower, couldn't get it done. We're still oscillating right now. We are still oscillating. It's a big battle, wide range of accumulation right now at the lower levels for Tesla. Is Tesla a good buy? Well, my question to you is, what's your time frame, right? Short term, going to be bumpy. For sure going to be bumpy. They have earnings next week. Long term, though, there's a lot of long-term positives for this company, right? So there is a long-term thesis here. You know, FSD, robo-taxis, Optimus robots, right? Their efficiency for their battery cells, right? The 4680s. You can make a play. You can say about the energy play, the insurance plays. There's tons of long-term positives. Trust me, I know them all. But you know, a lot of that stuff is like 5+ years into the future for real translation of those products to the bottom line. As of right now, it's still mainly a car company. Special shout out to their energy business, of course, but their main source of revenue is still cars and not robo taxis just yet, just cars. And we know the market for environment for all cars right now is not very good, right? So keep that in mind for Tesla. It will be beholden to the same thing as the other car manufacturers, which is largely interest rates and consumer demand. Moving on to Palantir right now, 4.6% to the downside today, or I mean to the upside, excuse me. My bad. Sorry, don't jump at my throat right now. Higher lows are trying to be set by the markets right now at the lows of Thursday as well. I'll just take those. Into support, very nice. Above support, 83 down to about 77. Palantir's looking for the break above and has a nice, cute little daily uptrend, right? Doesn't look like much, but from the lows, that's like a 44% move. Crazy, right? Doesn't even look like much. 44% off the lows Palantir's rallied so far. And the weekly as well. They had the weekly downtrend here, the bears, and now engulfing move. So fully engulfing move. If we cannot push higher, the bulls have tons of space to set a higher low and go for the trend change. And this would be some weird form of a head and shoulders play. So if you do come back down here, there might be some trade opportunities for a swing trade long, but also for selling puts under the market at high volatility. Try to target the lows of peak fear, peak uncertainty. Palantir, I don't need to tell you guys if it's cheap or expensive. You guys know it's very expensive right now. So just understand if you're buying shares here at 90 bucks, I mean, you're not buying the cheapest stock in the market, not even close, but I am a Palantir shareholder for the long term, and I will be holding my remainder of shares. I did not buy any more shares down there. You know, I'm happy with what I have. I was looking for, 50 if we can get it. Maybe we can get it some point during the year, but, May is going to be crucial earnings for Palantir, so we'll see what happens for them. But tremendous rally on Palantir stock recently. It's just very tough to buy here. On a pullback, you can make an attempt, but it's very, very tough to chase after a 44% move on this stock. Although it is looking good for some follow through, it's just not my style, guys. You guys know that by now, right? SOFI, 1.03% to the upside right now. Same concept, going for the daily uptrend shift. That will be a break of the highs of Wednesday, which is 1163. So we'll see if they can get it done. If we ever roll over below the lows of, let's call it Friday or Thursday, they're kind of equidistant. They're kind of the same right now, yeah? If we get a rollover without new highs, it's daily downtrend. But who's in control here? Well, it is the weekly bears, right? As with on every single chart in the market almost. And the size of the bounce so far on the weekly is okay, just okay. It's over a 50% bounce right now. Not bad, but it does open the door for the bears to retest the lows if the market's sour once more, or it also opens up the door for the bulls if they're done here to reset the weekly uptrend. Nice level for SOFI overall. The valuation right now is still pretty good, all things considered, price to sales or the PEG ratio, depending which one you want to use. We are coming still into our support highs, lower 10. So my favorite way of playing this stock, you guessed it, writing short puts below the market, collecting some juicy volatility premium. And SOFI for a long-term portfolio, I think can do well, right? But they're still beholden to the same factors that are affecting JP Morgan, Bank of America right now. The demand for loans. The trading arm of the company should be doing well, but the demand for loans can be somewhat uncertain this year. So that's why, we may have to temper our expectations for SOFI this year and saying maybe they're not going to go to 30 bucks this year, right? If demand for loans was clear, if the economy was booming and rates were coming down, then you can say, okay, SOFI is a high candidate for crazy expansion, right? But now that the environment's kind of uncertain and loan demand is kind of uncertain, you've got to temper back your expectations. But I'm pretty confident, unless the company really screws up heavily, this should be a winner if you have a long-term time horizon next, 6, 9, 12, 18 months. Your shares bought here should eventually be rewarded, all things considered. Moving on to Uber right now, up 1.13%. Give me a very quick second. 1.13% to the upside, not looking too bad at all. Uber also setting the daily uptrend. Higher lows are set right now at the lows of Thursday, 68.58, and they're kind of clearing the area of support, right? 73 down to about 68.80. That's been a hotly contested area many times for Uber stock, either as resistance or support. And now we have a nice engulfing move, daily uptrend set as well. So we'll see if they can protect these on a pullback, if they can go for the expansion. Next target is resistance 77.5 up to $80. The weekly is also looking quite good. Weekly downtrend on the engulfing move. Well, the daily engulfing move right now on the weekly, 78% retracement. So even if we top out here and go for a higher low, there's tons of space above the fear lows 62. If we pull back a little bit more, I might be tempted to write some short puts in that lower range because I love Uber in the mid 60s. I think it's almost free money at this point, even at $70, guys. The forward price to earnings is very cheap. The PEG ratio is very cheap, and their free cash flow yield is absolutely fantastic as the company becomes more and more profitable over time, and they will be doing buybacks with record free cash flows. Moving on to TSM now. Lastly, TSM down 0.79% on the day. They had fantastic sales numbers. I showed them to you when they came out just, oh, actually, I didn't. I apologize. Maybe I showed them to you yesterday on the channel for the top 5 options plays, yeah? Let me see if I can find it. I don't think I find it anymore. It's going to be too far down. Anyways, record sales, guys, for TSM. They have earnings on Thursday, but they post their sales number 1 week early all the time. Fantastic sales numbers. I would not be worried about being an investor in this company, which I am, mind you. So the higher lows right now are set at the lows of Thursday, if we want to call it that way. 147, roughly, the higher lows. Into resistance, though, 171 down to 156. The expected move on this one as well, guys. They have earnings on Thursday after the bell, yeah? So, I mean, it might not move much before earnings. We'll probably wait for those cash flows and everything like that. But for the expected move, you're looking at about 6% up or down. So 6% up from here would be quite healthy. That would give us a nice daily uptrend into the resistance range. 6% would not clear the resistance range, but it would be close. And 6% to the downside, we'd be right back into somewhat of the fear low environment, which would be 147 to 138 support. I would love to find TSM back down here again. I will just write short puts under the market again on this beautiful company. And that's a minor area, right? But the bigger one, of course, guys, if you can find some short puts, 130, I think it's free money at this point. Yeah, this is 2021 highs, the 200 weekly EMAs. And if you can write some short puts down there, and if you get a sign, you're getting TSM at a 42% discount. For what? What's changed about TSM? Nothing, right? Okay, sure, tariffs, everything like that. What? People are just going to stop buying TSM chips because of tariffs? No, right? They'll keep buying them, and TSM's a fantastic company. At 160 right now, the forward price earnings is 17, man. It's so cheap. And the forward PEG ratio is 1.03. Very good. The demand is still excessively high. They reiterated that last week when they posted their sales numbers, and they will reiterate that again on Thursday. It just goes to, whether or not Wall Street will give them a bump after earnings is anybody's guess. One thing's for sure, though, if they make their ways to the lows, I will be trading this one heavily, as I have over the past few weeks. Again, that's everything we had for our market recap. Hopefully you enjoyed that. Now let's dive into some trades in my portfolio, shall we? All right, so taking a look at the positions, guys, you'll recognize a lot of these were on the top 5 options list from yesterday, and all of these short puts, for the most part, are in or around the fear lows. So keep that in mind, yeah? One of the trades that will not be in this section right here is a trade that I already closed today. It was on the top 5 options list yesterday. If I can just bring this over, it's the Wells Fargo. We wrote Wells Fargo this morning for 22 cents, targeting 57, which was top 5 options yesterday, yeah? Got 22 cents, closed them for 7 cents, and I took an NVO instead. So here's all the short put list, yeah? Apple, 170s for the week. I did not get the, or Amazon rather, did not get the high of the day on those contracts, but I'm fine with it. 170s is towards the, towards the lows. I wouldn't mind picking up Amazon down here into support, which is why I wrote those contracts to begin with. So we'll see what happens overall on that. Fairly happy with that position. AMZUs, I had those as of last week. I think I showed you guys, or maybe not. AMZUs, same concept. It's 2 times average Amazon. I'm all the way down here for Friday. I don't know if they fill me down there, but if they want to fill me down there, just give me the shares and get it over with, yeah? We got them for 30 cents. They're down to 10, so we're already up profitably on those. Chewy, 31.5s. I did not talk about them, but when I was looking at plays for this morning, Chewy held up fairly well during the tariffs, and I'm down here at 31.5 into support, which is prior resistance, and big support for the markets down there. Wouldn't mind picking up 100 shares of Chewy down there. They're trading very cheap price to sales, guys. 14 billion market cap. And this year in sales alone, they'll be generating a decent amount. It's not that profitable of a company, but they are growing EPS very nicely. And revenue this year will be 12 billion, right? So almost a 1-to-1 price to sales. I like the valuation, so I took the trade. CVX was also one of the trades featured yesterday. CVX, oil play, right? They had a down day today, so I figured I should benefit a little bit from that. I wrote the 126 puts, which is exactly the location I was telling you guys about. Yeah, the lower range of support. Where is that? Well, it's the 2013, 2014, 2018, 2019 highs, and now it'll be all the way down below there. And if we get down there, probably we'd be close to weekly oversold conditions. I mean, we're already daily oversold. So if I get filled there by Friday, we'll see what happens. If not, I'll just get to collect this very beautiful 41 cents. Moving on, we still have the ELF Beauty assignments. No covered calls just yet. I'm waiting for ELF to pop a little bit, being a bit greedy. My average cost on ELF now is down to like $58 something. Even if it does say 70 here, you guys know how it's been, right? We've been just reducing our average cost basis actively. If I just go into the assignment tracker here and I show you guys once again, for those of you that are new on the channel, maybe you haven't seen these, but the ELF Beauties, I mean, we've been doing work on these. Our average cost now is like $58.94. It's actually lower than that. I have to update it with last week's attempts at DCAs as well. It's around 58 bucks, somewhere around there, okay? So not too far off. I'm going to wait for it to pop up a little bit more. We still have the grab shares with some covered calls on for April 25th. I'll keep grab. No problem at all with that. I'll average more into the low threes if I have to. I like that one. Micron as well. 61.5 short put on deck for Friday. Micron, I was bringing this one as well up yesterday. Top 5 options play. We waited a bit for a pullback on Micron. I got that one, towards the end of the day. I'm targeting pretty much all the way down there. Yeah, I got the 61.5 on Micron for 32 cents, 0.5% for the week. A little bit aggressive, but where am I? I'm down in the fear lows, all the way into support, guys. And Micron is a joke right now. It's an absolute joke how cheap this company is. It's literally a 10 forward price to earnings. 10. What is it, like a bank or something? I don't know, but 2.2 price to sales. Come on, I'll give it an attempt down there, right? On Micron, easy trade. Nike 50s. I like those Nike 50s. I was looking at them. Nike as well. Fear lows, yeah? Fear lows into support. $50. If I somehow get assigned at 50 bucks on Friday for Nike, what price am I getting? Well, I'm glad you asked. I'm getting a better price than everybody in the last, 10 years? So I'll take my chances on Nike down there. Maybe you like it, maybe you don't, but none of this is financial advice, right? They're just my trades and ideas. NVO, you might have seen I swapped those Wells Fargo for the NVOs for equivalent exposure. NVO is just so cheap right now, man. This is the largest decline on NVO in the company's history. You can go back in time and you can never find, even back here, you'll never find a 70% drop on NVO, right? Even in the great financial crisis. How much was that? 45? How much is NVO now down, top to bottom? 60%, not 75, excuse me, 60%. The biggest drop in the company's history, yeah? So I will play the fear lows. If I get assigned some shares, no problem. I think the company's cheap. I went with the 62s, a little bit aggressive. I told my chat, if you guys want to be a bit more conservative, you can go with the 61s or the 60, which are the fear lows. But truly, the support range below is 56 down to 48. There was no premium down there, but at least I know I'm coming into a big level. If I do get a sign, at least I know I have some support down there. But we are weekly oversold as well, right? So not a bad trade overall, but a little bit aggressive on my part. Reddit 77.5s, this one as well. Just a growth stock, right? Growth stock Reddit 77.5s. Where is it? It's kind of all the way down there. Yeah, 77 is like the top end of the range. Targeting the fear lows or lower. It was red today, so I figured I should take it. Very wide margin of safety on Reddit, yeah? From here until Thursday, it's like 20% plus. Can it happen? Sure, but I mean, I'll take my chances on Reddit. We're already up decently on that trade overall. Restoration Hardware, the few shares that I still have, I'm still keeping them, just so you guys know. Rocket Mortgage is a play on yields. In other words, Rocket Mortgage has come down. This one mimics the TLT kind of. It's a mortgage company, right? So it'll mimic it was down a little bit today. We took it early on in the morning, and I got the 1122 strikes, the fear lows into big support for RKT, resistance and support for the markets right there. So I went the 11.2s. I got 10 cents, about 1%. I know it's not a lot of money, but we're up still 5. You can scale these, right? Larger accounts can do 5 of these, 10 of these, right? It's scalable. That's what the purpose is. SOFI, I still have my 200 assigned shares now. The cost basis on them is about 1260-ish, all things considered, with premium received over the past few months of farming on the initial 200 shares. So now I'll be waiting for SOFI to pull up a little bit to write more covered calls there. SOXL, a few throwaway contracts for this week. One I took last week on Friday, $7 puts for 22. They're up today. You can see we're 70% profitable. We got the $9 ones. I'm looking to like assign myself almost on SOXL. I want 100 shares to ride higher. I'll just keep them and eventually write covered calls on them when I'm into profit. SVXY, we took this a while ago, but it's an inverse the VIX play, short VIX. We're still not back to break even. If we got this one, VIX 50, it just doesn't like the chop, man, because it's daily volatility resets. Yeah, so it just kind of burns. So it's a very small share position, but I'll probably close it sometime soon because it's just not moving the way that I kind of wanted it to. But it's fine. We're not even down that much money, right? Like, how much are we down here? Like $5? Big deal. SYM right here, same thing. Short put for Friday. Symbiotic, towards the fear lows into big support down there. Very obvious play, resistance, support, action support as well. Decent play, robotics play, right? And then we have the TLT calls still in place. These I took all the way back in like July, August of last year. I've kept them. They're still underwater, right? We're down still a lot of money on these, but we have the 80 calls, which is a new position, which we opened about a few weeks back at this point in time. They're underwater right now, but we have all the way until January 2027. I think there's going to be a winner. TSM, don't mind that. That's just a dividend that got paid. And TSM, the 132 puts, I went for it, guys. I went for earnings. It's 2 standard deviations away. 132 put into earnings. We got them for 70 cents this morning with the increase in volatility. And they're now worth a little bit less, but probably they're going to hold a lot of this premium into earnings. And then we have a few swing trades for some call debit spreads. Very small, though, guys. Very small. Name of the game here is go small. A few of these trades you guys have not seen. Most of them you have not seen. Nike. I took a lot of trades for negotiations between China and the US. Trump is negotiating with everybody else except for China. So that deal is coming eventually, but we don't know when. But I'm choosing the companies that could benefit the most from those deals. Number 1 is Nike. Number 2 is UPS, logistics play. It's very cheap right now. Nike, bull call debit spreads for July. UPS, bull call debit spreads for July. Apple, bull call debit spreads for July. 3 companies that stand to benefit from those China negotiations. And KWeb, well, I mean, that's China, so I assume they would benefit as well, right? So these, I think I showed you them on the Wednesday session. I took the Amazon Leap as well, bull call debit spread, 2027, December, 950 days, 2.5 years, guys. A long time, right? So keep that in mind. We'll keep this one. It's now down marginally, but it's okay. TQQQ took this one on Friday when we got news of the Fed put. That one is up okay right now. Meta, we took this one because, as I was saying on the charts, it is lagging behind its sector peers. I'm looking for a bit of a recapture to the upside. We have all the way till June. I'll hold these through earnings. I will. But as you can see, the call debit spreads either June, July, or August. A lot of time on them. Micron, we also got a new leap on Micron. Leap call debit spread, the 80s versus the 170s. Why? It's just too cheap, in my opinion. And it's an integral part of the AI trade, which I still think is going to be prevalent for the next 2-3 years. Right? People are just not going to stop using AI or building out AI. They provide a lot of HBM memory and DRAM memory. HBM for the data center chips, whether it's Google's chips, Microsoft's chips, Amazon's chips, or NVIDIA's chips, AMD's chips, Intel's chips. Everybody uses Micron in terms of HBM, and their DRAM for consumer electronics, for the refresh for AI PCs, smartphones, laptops, iPads, stuff like that. And lastly, NVO, our newest entrant to the bull call debit spread positions, are now the August 70 versus 75. Stock's very cheap, looking for some upside, looking for a recapture of 70 to 75 on NVO, which is literally just one little level above us. I'm not asking for the world. These are all just little swing trades. As you can see, I've gone very small on my long positioning. Now we have the Trump put, right, from the tariff pause, and we have the Fed put. I'm looking for a little bit of market expansion. Did I go very heavy, guys? No, I got 2 leap contracts here. Not that much. Not as if I went for the whole, like everything, right? And then just call debit spreads. Very small call debit spreads for some upside expansion plays, many of which are already profitable. They were profitable a lot more at the top of the day today, some of which are still underwater, such as Nike, Meta, NVO. We just got them today, and Amazon here. But that's perfectly fine, guys. Very happy with the repositioning of the portfolio overall. It's been going well, but as you can see, like, over 80% of my account is still just pure wheel plays. And the positions long that I have are very small and very, there's just swing trades in nature, right? So that's everything I had for the trades. Hopefully you guys enjoyed that and the rest of the video. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing if you're new. Would love to have you back. We do these Monday through Friday after the close. And lastly, if you have any questions, guys, leave them down below. I'll be answering a bunch of questions tonight. So hopefully I can get you guys to leave some questions, and I'll be glad to answer on stocks, options, macro, tariffs. Anything you want is fair game. And lastly, if you guys want access to all of my trades in real time, the wheel trades, the call debit spread trades, all the different trade ideas that are possibly in the Discord, the link is, of course, down below. Not only that, though, guys, we do everything, right? The wheel trades. If you guys want put credit spreads, call debit spreads, leap call contracts, what else? I mean, everything in terms of options, right? A lot of people ask me about straddles, everything in between, right? Especially during our live streams. We do live streams Monday through Friday at the open for about 2 hours where I trade live and take all of your questions on your stocks, your options, and especially your long-term portfolios. We do a lot of long-term portfolio building. I know I focus a lot on options trades, but we are doing swing trade shares for some people as well, long-term portfolio building for everybody as well. And if you cannot attend the live streams, they are all recorded thereafter for your viewing pleasure. We also do private videos in which I give advanced level trading strategies, whether for bull markets, bear markets, how to grow small accounts, medium accounts, large accounts, what percentage of your account, depending on the size, should be in which trading strategy, depending on your goals, and many different advanced level topics such as that as well. We also, you can ask me your questions in our chat rooms all throughout the day. I'm very fast to answer all throughout the day, even through the night as well. And lastly, I give all access to my charts, all my watch lists for options, anything, long-term portfolios, stuff like that, and any technical analysis that is on charts overall, and any annotations. You can just copy paste them with the click of a button. You get all the TA, all the watch lists, all the annotations, just copy paste all my charts. They come included too. If any of that sounds good to you guys, the link is always down below. And if not, I guess I'll see you back on the channel. So thank you very much for watching as always. Take care. See you guys tomorrow.